So let's talk about the Moody's Investors Services this week. Released a new report on Sub-Saharan Africa that forecasts a negative economic outlook for three of Africa's biggest economies, Nigeria, South Africa, and Kenya, as well as the rest of the continent, due to rising debt costs of around 64% of the GDP in the near to medium term. Now, the Moody's report says low domestic revenue mobilization will continue to plague Nigeria, Ethiopia, and Ghana, among others. Joining me to discuss this is the head of research at United Capital Plc, Wale Olusi. Wale, good evening.
Good evening, Frank. Good evening, Bossy.
Let's start with the big news. This is Hess Holding and Transcorp, $1.1 billion, picking up 45% of the OML 17 from Shell, from Total, and ENI. This is one big money, good news for Nigeria's oil and gas industry.
Yes, I think so. I think, that's the good news. We actually need to, expand capacity for oil production in Nigeria. And if I hear you right, the Transcorp, the new oil and gas is going to definitely add to the production capacity of Nigeria. I think one challenge that Nigeria have had in the past is that we depend so much on the oil and gas sector. But even that sector that keeps, laying the golden egg, needs to be taken care of. You need further investment in that sector, but, not much have been heard from that space, except for, recently the Egina oil feed, production, and now this.
Okay, so that's good news. We can use any piece of good news right now, I'm sure. So let's talk about this Moody's report. Do you think it reflects the true position of things of these sub-Saharan economies at this time?
I'm struggling to hear you both saying. I think there's a problem with the, there's a background noise from the studio.
Okay.
But if are you talking about the Moody's? Can you confirm that?
Yeah, the Moody's, yes. I was asking if this report actually reflect the true position of these economies that were listed.
Oh, okay, I can hear you clearly now. Did you say Moody's?
Yeah, the Moody's Investor Services, yes.
Correct.
So
please, can you repeat the question?
Yes, my question was that, do you think this report reflects the true position of things?
In Africa? Oh,
yes.
Okay, so, I think I ran through the report. I think it broadly, spells out, some of the sentiment a lot of investors as well as analysts have about, a lot of economies in Africa. With the pandemic, which has devastated most of the, economies across the region, many of them have revenue challenges. Whether you are a tourism-dependent economy or commodities-dependent economy, be it, oil-dependent or agro-allied or precious metal. Most of the economies in Africa rely solely or significantly on commodity prices. And with the, demand shock, most of them, have seen a lot of pressure, not only on exchange rate, but also on government finances. Many of them are very, very vulnerable to fiscal shocks at the moment. And, most of them will need intervention from multilateral, agencies. If you look at what we saw last year, intervention from the likes of IMF and World Bank was significant in many of these African economies. So I think the Moody's report, broadly to a large extent, actually reflect, the sentiment across, the analyst community for many economies in Africa.
Are you particularly worried about the key factor of what you call the debt burden? That's the key at the heart of this report, by the way. It's about the debt burden, the size of the debt, the servicing obligations, the revenue that these sovereigns need to push these debt payments. Nigeria, South Africa, and Kenya, three of the continent's largest economies.
Yes, I think it calls for, worries, especially for, maybe not the largest one, but for the smallest one. For example, last year, we saw a debt default in Africa. Zambia actually defaulted on their debt. Before the pandemic struck last year, a lot of African countries took to the, Eurobond market. They were issuing a lot of commercial loans at a relatively expensive prices. With the pandemic and the recession, most of them had currency devaluation, and then with fiscal vulnerability, it means that their credit ratings will reduce. Their ability to actually meet those debt obligations is actually put to question. Earlier in the week, we saw Benin Republic actually issue a new Eurobond. Some of us had worries around the pricing of such Eurobonds, but surprisingly, I don't think the pricing was bad. But for big economies such as Nigeria, Kenya, and South Africa, we think because of their relative size and their ability to be able to, tweak one or two things here and there, they may be able to mobilize revenues and, of course, be able to meet their debt obligation. But I think if you look at in absolute term, those debts are looking considerably disturbing. Most of them need to be able to raise revenue that will be able to service that debt. If you look at it from a GDP point of view, some of them might still be okay. Nigeria, for example, maybe South Africa and Kenya as well. But in terms of their ability to actually mobilize enough revenue to meet their debt obligation, there's a lot of concern that has been raised, not only by the analyst community, but even multilateral agencies such as the IMF and World Bank.
Wale, very quickly, one of the key risks in this report was what the Moody's call state-owned enterprises. State-owned enterprises. Look at the NNPC in Nigeria, for example. The Kenya National Petroleum Corporation, they have not started producing oil nor selling crude oil, and already that oil corporation in Kenya is already in billions of shillings in debt, and Kenya is not even selling oil. So before Kenya start producing, this state-owned enterprise is already ramping up billions in debt. This is Nigeria with the NNPC running billions and billions of losses, even on the refineries. So do you think this is a key problem here moving forward?
I think the state-owned enterprises are definitely a key risk. The problem with not just Nigeria, but many African countries is that, we don't know, where we want to, belong to on the spectrum. If you look at the economic system that we practice, are we a capitalist economies or socialist? If you look across board, what you find in most economies in Africa is a mix of both sides. Hence, you now have not only NNPC, and many oil-producing, oil enterprises, but you have many African countries in businesses such as aviation, airports, education, electricity, power, and all of these things. And most of them run on huge subsidies that the government cannot sustain. So, this is the time where you start asking questions around what is the business of government in business. Do we need to privatize most of these state-owned, enterprises for them to become more efficient and become profitable? Do we need to list some of these entities on the stock exchange so that analysts can ask questions and we can put them correct on their toes?
Look at Congo.
I think it's a cause for concern.
Congo is taking 4. Wale, just a second. Congo is listing 4 of its public companies on the Central African Stock Exchange. 4 public enterprises. Ghana is considering 16.
Fantastic.
So the latest is from Congo. So do you think this wind should also blow into Nigeria?
I think it should. I think it's only about time. Most of these authorities will figure it out. If you realize you can't sustain, many of these state-owned enterprises that run on huge subsidy, then you will need to privatize them. You will need to list them on stock exchange.
Sell them
off. The business of government should be to tax these organizations so that, you allow them run as commercial ventures that are profitable. Government can now go ahead and tax them and make money from that, rather than running them themselves. from history, governments have proven to be very bad managers of businesses. We should allow private sector to do
on a
this.
final note, and we apologize for that poor, I guess it's the internet. What do you think the risks are to Nigeria's current fiscal imbalance, what we call current account imbalances? Do you think the central bank has what it takes to continue to support, fund, print money, whatever it takes to support the government?
Well, I mean, I don't think it's sustainable. I don't think the central bank can continue to, finance the, federal government. Besides, there's a threshold for which, you're allowed to do that, even as a central bank. And I think it should cause for worry if, the central bank continues to print money to fund government, activities. We don't think it's sustainable. We think, the central bank should look at that critically and see into, how else they can support, the government rather than directly funding the federal government beyond, Fiscal Responsibility Act and, of course, the allowable threshold for them to do that.
Wale Olusi, Head of Research at United Capital Plc. Thank you so much. Enjoy the rest of your evening and a great weekend. Thank you. We appreciate that.